This conference will now be recorded.
Okay. Today, we work with service business and we're working with our rental car company, and we simply provide a service and was paid for it. So that's a service company. Today, we move into a merchandising company. In a service company, we always just debited cash, receivables, and credited sales. But when we move to a merchandising company, there are three entries that we make. First of all, when we buy the inventory, we debit inventory and credit accounts payable. We always credit accounts payable because when the inventory is delivered, we do not pay the delivery person. When the sale is made, two entries occur. First of all, there's the entry to debit cash or receivables and credit sales for the sale being made. Then there's a second entry to debit cost of goods sold and credit inventory, because most companies are going to keep up with their inventory, charge it to cost of goods sold right away, so their records are up to date, so they know the order when they're low on inventory. So most times that inventory is going to be updated as the sale is made, with the item moved from inventory to cost of goods sold. If we had a business that had a lot of low price items, they might not do this. They may just wait to once a year to do the inventory. But most companies today, when that sale is made, they're also are making that the companion entry to debit cost of goods sold and credit inventory. And that's called the perpetual inventory system. We'll talk briefly about the periodic system next class period. Next, we come to the income statement and the adjustment that we made. When we have sales, we subtract returns and allowances to get the net sales. Then we subtract cost of goods sold to get the gross profit. Most times we're going to pull this cost of goods sold and put it here because we need to know whether or not we made a profit on what we sold. And that'll be our focus in this chapter, on whether we made a gross profit. The operating expenses, that's what we covered already. So we know how to handle salaries and delivery and rent and depreciation. We know how to add those up. So the operating expenses are total, and then we have the net income. So we always subtract cost of goods sold from sales to get the gross profit. We subtract, not add. Every now and then people want to add. And then we subtract the total expenses to get the net income. So that's how our income statements will be looking in the future. Okay, Dawkins, we ready to sell these shoes?
Wait, before you start messing with Dawkins, I had a question. So cost of goods, can you run over what cost of goods sold mean one more time?
Cost of goods sold means what did the item cost you when you sold it. So in this case, we have shoes that we're selling for $50. They cost $20. So if we sold one shoe, sales would be $50, cost of goods sold $20. So cost
I
of
need
goods.
an example because that I'm not really connecting that right now. It don't make much sense to me. So
Okay. Let's assume that we had the shoes that were selling for $50 and the cost was $20. and we sold one shoe. Okay, we sold one shoe. We make an entry, first of all, to purchase the shoes. We debit inventory and we would credit accounts payable. That's to purchase the shoe. When we sold that one shoe for $50, we just got one shoe, we bought it and we sold it. We're going to debit cash for 50. We're going to credit sales for 50. But we also are going to debit cost of goods sold for how much?
20?
Yeah, 20.
20, yeah, because that's how much we bought it for, right? Or how much we got.
That's all cost of goods sold is.
So cost of goods sold is the same as the inventory, basically.
When you sell it, yeah. It comes out of the inventory. So when we buy the shoe, it goes into the T account inventory. When we sell it, we pull it out of inventory and put it in cost of goods sold. Inventory is what type of account?
So it's like supplies and supplies expense, except it's not as expense, it's cost of goods sold.
Correct.
Okay.
Very good analogy. Does everybody else understand that? Thank you for those questions, because I'm sure that helps to enlighten a lot of people. So we appreciate those, Williams.
Okay, so Professor, I have a question. So
Okay.
I understand this part. So like when we're doing the quantities, you know how like the numbers are gradually increasing, are we like multiplying the numbers? I mean, are like the 20 by 2, or how does it go? Because are we
Let's
the
finish
number
column
that's
1 first. Then we'll let you go to column 2.
okay.
Let's just finish column 1. So when we did the income statement will show sales of what?
Sales
50.
is 50.
Cost of goods sold of what?
20.
20. Gross profit 30. Okay. That's how it looks when we sell one shoe. And so this is what we will be doing over the next 2 weeks. We will be buying shoes, selling them, buying them. We're going to make this entry. When we sell them, we're going to make these 2 entries. And then we're going to do the top of the income statement showing sales, less cost of goods sold to get the gross profit. How's that sound?
Good, I
Okay.
guess.
In the next one, it says we purchase 2 pairs of shoes and sell 2 pairs. So if we purchase 2 pairs, we must have paid what?
40.
40.
40 for 2 pairs of shoes. Always on account. Then if we sold 2 pairs of shoes, how much money did we get?
100.
We're going to credit sales for what?
100.
So why when we buy inventory and stuff like that, is it always on account? Are we never paying? I mean, I understand it's like a big business thing, so
Not paying the delivery person. Got it? UPS may be delivering the inventory. A person driving a truck may be delivering the inventory. The other part of it, you need to check the inventory to make sure it's all there.
oh, so if you do accounts payable, it's like more liquid than okay.
No,
Okay.
you buy the inventory, but if you're running a shoe store, you're not going to pay the people until you check all those shoes, make sure they're there and they're not damaged.
Mm. So that's why we use accounts payable. Got it.
For accounts payable. So if you're running a business of any size, you don't, the company, is not, sending people out to collect, and then just think about security. If the delivery person is collecting cash and driving around, it's probably not a good situation also. Okay. So we don't have any cash involved with the delivery person. You just, okay, sign off saying I delivered this to you. Then your inventory people go count it to make sure it's there. Then they send that to accounts payable clerk to tell her, okay, all of it's here, pay. The accounts payable clerk pays. So the inventory comes into the warehouse. The warehouse person has the invoice showing what was ordered. They count it to make sure it's there. Then they send it to accounts payable, and accounts payable pays it later. Now, you've been making that entry on supplies all the time. When we bought the supplies, you debit the supplies and you credit the cash, or sometimes you credit the accounts payable, then you pay it on the account payable later. So this is no different from what we've been doing on a regular basis. Okay. So what's the cost of goods sold entry going to be now?
$40.
Okay, so we debit cost of goods sold for 40, credit inventory for 40. If we do the income statement, how does it look now?
Sales is gonna be 100. It's gonna be 40.
Gross profit?
Profit of 60.
60.
Any questions? All right, well, let's see if we can sell 5 then. We got to buy 5 first. So we buy 5. How much we paying now?
100.
For 100. So when we sell all 5 of them, what happens? We're going to get how
250.
much? How much we getting? 250?
250.
And then our cost of goods sold entry is going to be what?
100.
100.
100.
Y'all getting this down. And now when we do the top of that income statement, sales is what?
250.
250.
Cost of goods sold.
100.
100.
Gross profit.
150.
150.
See, y'all getting this down. Let's sell 10. See, we so get to some higher numbers. So if we're selling 10 and buying 10, what's going to be our cost now?
200.
200.
100. Then when we sell all of them, how much we get
500.
now? 500.
Mm-hmm.
Sales 500. Then we're going to, what are we going to have in cost of goods sold now?
200.
So now sales 500,
Mm-hmm.
cost of goods sold what?
200.
200.
You have a gross profit of 300.
300.
Okay. Now you wouldn't want to go in a shoe store, there are no shoes in there, right?
Right.
So let's just say now we got to have extra shoes and everything. So we buy 10 pairs of shoes, but we only sell 5. And that's how businesses typically run. They don't sell everything right away. So if we buy 10 pairs of shoes, how much we paying?
200.
200.
Still. Sell money we getting?
$250.
250, yeah.
What's cost of goods sold gonna be?
50?
No, it's gonna be
Was it
200.
200? Oh yeah, 200.
How much cost of goods sold gonna be? How many did you sell?
50, wait, hold up.
250.
If 50 by 250.
05, so it'd
That's
be
250.
100.
I thought it was 100 at first, but you said 50 by 5, so
Y'all right, he just playing with y'all.
oh, okay.
One.
So how much cost of goods sold? But you got 10
$100.
That's a good sold would
$100.
be
We
100.
only sold 5, so it's 100.
shoes and you sell 5 in your shoe store, Williams.
100. It's $100.
Is this the first time I heard 100, or my hearing off, or what? Or y'all saying 100 before?
That's definitely 100. Yeah, we'll say 100 before.
Why is it 100?
Because we only
Yeah.
sold
Sitting here
5.
lost.
So
This is sitting here lost. And you just take him to Mitch talking about anybody know what he talking about.
that's what office hours.
What? For real?
Let's listen up. Okay. When we purchased 10 pairs of shoes.
Over here trying to sit on my laptop. Sit down, Blue. She been laying on my back.
Kaplan, mute yourself. Okay. So we have the 10 pairs of shoes that we purchased. We sold 5. This is typically going to be the case. So we purchased the 200, but just like in that supplies example, we only going to put in cost of goods sold what? We're only putting in cost of goods sold what we sold. Remember, when we purchased before the supplies, and we only transferred out what was used. So we sold 5, we getting 250, but the cost of those shoes is going to be 100, just the 5 that we sold. The others are still in the account in inventory. And when we get to sales, the sales are going to be what? 250,
250.
cost of goods sold, 100, gross profit is what?
150.
150. And now we have some shoes in inventory. So on the balance sheet, we still would have shoes in inventory. So any question on this one now, where we bought 10 pairs of shoes, but we only sold 5. So we would still, we would have had in that inventory account originally 200. If we take out that, then on the balance sheet, we've got an inventory account. In this situation, with 100 in it. In all the other situations, all the inventory was sold, so there was nothing in this account. But when
Wait, so Professor, the inventory is 100 because okay, you're listing it from the sale JE. Okay. All right. I was kind of confused because I was like, where'd you get the 100 from? But I see it now.
we bought 200, yeah, we sold 100, so 100 is left. That's a good point. Okay. So the cost of goods sold is not the 200 we paid. It's only the 100 for the ones we sold. All right. Bought 10 and sold 8. You all work that out. Take a few minutes, work it out. and let me know what it looks like in terms of the entries, what's on the income statement, and what's on inventory. So what's going to be in the purchase, JE?
Be 400. Wait, no, it'd
200.
be 200. Sorry.
Same 200. When we sell 8, what does that look like?
400.
400.
Got $400 that we made on the sale. And what's our cost of goods sold? I can't hear you all.
160.
160. How we get 160?
8 times 20.
8 times 20. So 160. What do we have left in inventory? Well, let's do our balance sheet first. So we have what, 400 here.
Mm-hmm.
COGS is 160. So what's our gross profit?
240.
40. And what do we have left in inventory?
80?
2 pairs of shoes.
Oh, wait. Yeah,
So
It would be
100.
it would be 100.
you only got 2 pairs of shoes now. How much did you pay for those shoes?
Oh, 20.
$20 each. So how much would it be?
40?
40.
Now,
Okay,
you know,
okay,
yeah,
so for inventory, it would always be the dollar amount, right?
the dollar amount, quantities in
Okay.
dollars. We'll get the quantities too after a while.
Okay.
Now, you know, there are shoe stores all over Houston, all over the world. And people are running these shoe stores with all kinds of educational background. So you just got to make up in your mind, I can run a shoe store. Okay? You got to make up in your mind. If all these other people can run a shoe store, and I got a little more education than a lot of them, then I can run a shoe store. And I can, with my shoe store, buy shoes, sell them, and be able to determine how much money I made, my gross profit, and what my inventory is on hand. That's not too much to ask, is it? Is that too much to ask? Uh-huh. Okay. So now I got to work this out again for you. Now, you know, all the time, the shoes don't cost the same amount of money when you buy them. So we're going to assume we sell them for the same amount. But sometimes the shoes cost different amounts of money. And if the shoes are costing different amounts of money, let's go back up here. So we buy 10 pairs of shoes and we sell 8. All the way back up here now. All the way back up here. But suppose we had a situation where instead of all the shoes costing 20, the first 5 cost 20. Get this out here. So we bought at 20, we got 5 at that price. But then when we went back to buy some more because we didn't buy them all at once, the next 5 cost 25. So now we got 5 that cost 20, 5 that cost 25, and we sell 8. What we're gonna do now?
Well, we gotta know which ones that we gotta know which ones that we sold. It ain't like, you know, we can't just guess that, can we?
If we had a car and we were buying a car, we would have an invoice for each car. And we would specifically identify what's being sold. But if you got 5,000 pairs of shoes back there in your shoe store, you're probably not gonna have written on the box what they cost. And so when you go get the shoes to sell them, you're just bringing the shoes out. So you probably don't write on the box what. You ever have a pair of shoes, get a box that says what the shoes cost? The salesman bring it to you?
No.
Okay. So what else can we do? We can make an assumption that we sold these cheaper ones first.
Why
So
would we go with the cheaper ones first versus the ones that cost the most?
well,
Just to get it
we
off.
got options. We got 3 options. We can, when you go in a grocery store, if you reach in there to get something, what's always up front?
The cheap stuff.
Not the cheap stuff. The what? The
The
old.
more expensive stuff.
No, the old. Well, I'm talking about if you got a lot of quantities. Let's say
Oh, well, yeah.
if you're in the milk section, what's up front?
The
The
old
one that's about
milk.
to, yeah, the one's about to expire in 2
The
days.
milk is gonna go out tomorrow, but somebody gonna be dumb enough to not look and still buy it.
That's right. So in situations where people too dumb to check, then you sell the old stuff first, okay, and then you come to the new stuff. Okay, you sell the old stuff first, then you come to the new stuff. Or if you got people who are discerning and they go get the new stuff bought first, then you got to reverse it and you got to sell the new stuff first, then the old. And then if you just mix it all up and you don't have any dates on it, so you're selling stuff without dates now. That is everything. A lot of things have dates, but that's food, but there could be some things that don't have dates on it. So then you can say, well, I'll use the average price. So you got 3 ways of pricing stuff. You can sell the old stuff first. That's FIFO, first in, first out. You can sell the last stuff first. That's LIFO. Last in is the first out, or you can get an average.
What that stand for?
WAC, weighted average cost.
Oh, okay.
First in, first out cost FIFO. Last in, first out cost LIFO. WAC, weighted average cost. So moving back to this example now, and we just gonna be over here on this situation here. Let me bold these for a second. So let me bold them. So we just over here. Okay. Now, can I clean these out? I got them in another one. Anyway. Now,
So when we see problems like this, are you going like how do we know which one to use? Are you gonna specify which method we should be going with?
Yep, I'll specify it. Suppose we were using first in, first out. Suppose we were using first in, first out. And we bought 5 at 20. And then we bought 5, let's see. Then we bought 5 at 25. That's what we buy. We're using FIFO. And we sell 8. Okay. So when we make the first purchase, we would debit inventory for 100, and we would credit.
Why wouldn't it be 225? We bought all of it, right?
Well, let's just assume we bought it at different times.
Oh, okay.
Then when you make the next purchase, then would have been 125.
They come sit in my chair, I do their hair even. Because the thing is now I gotta keep them in my chair. I'm not gonna do your hair shitty because now you're gonna feel like I can't you because I see how you get home, girl hair.
Somebody need to mute themselves.
Okay, there we got it. Oh.
Y'all wilding today, boy. First was somebody with the dog. Now y'all talking about somebody here. Y'all wow.
Okay. So we're gonna make 2 purchases now. We're gonna buy 5 at 100, then we're gonna buy 5 at 125. We don't want to lump them together. Okay. And for the non-A students, C students, all you got to do is learn FIFO. Okay. So, because we aren't gonna buy them at the same thing, but I don't want to tax you too much. So you just concentrate on FIFO, which when we sell in the first ones. Okay, so we make the sale. How many did we sell? 8, right? Got it? How much money we get when we sell the 8? Can y'all sell 8 pairs of shoes at $50 each?
Yeah. So that's $400. Sorry, I was trying to eat something.
Eat? How can you be eating at a time like this?
Cause I'm hungry.
Okay. Wait a minute. I went over too. Well, that's okay, but get there. Okay. Now, so we got the purchase JEs, no problem, right? We purchased 5 at 20, 5 at 125. Now we need the cost of goods JE.
So wouldn't it be like the first 5 of them for $20, and then the last like 3 of them was like $125? So
put 3 at 25, right?
Well, yeah. So it'll be like 175.
So let me just go in here. We sold 8. We sold this first 5. Okay, so we sold that first 5. So we sold 5 at 20. So that's going to equal what? $100, right? 5 times 20 is 100. Used to anyway. Then we're going to sell 3 more, right? At what? What did they cost you?
25.
25. So that's going to equal what?
75.
75. And if we add them all up,
Wait, hold up. How did you get 3? Oh, because the top number is 3 or something. Because I'm very confused now when I see the.
we sold 8.
Oh yeah. Okay.
5 that cost 20, 5 that cost 25. And we selling the first one.
Oh.
So we're going to sell 5 at 20, 3 at 25. So how much cost us all told, Cameron?
Total is 175.
175. So we got a little calculation in here to determine
every
what it
time.
is. So we would be debiting cost of goods sold 175, and we'd be crediting inventory 175. When we go here, sales still 400, but the cost of goods sold is what? I can't hear y'all.
175.
Thank you, Cameron. 175. So what's our gross profit?
225.
Did it right. 225. What we got in inventory now? We got 2 at what?
25. So about 50.
Equals what? 50. So 225 plus 50, does that equal our 225 that we had in here? I mean, excuse me, 175 plus 50. That's going to equal our inventory and our gross profit. So let's look at what we did. We said we sold 10, but they cost different amounts. 5 of them cost 20, 5 of them cost 25. So we bought 10, we sold 8 of those. Okay. Purchase, we had 2 purchases, 1 at 100, 1 at 125. Then when we sold the 8, still $400, but when we get ready to make that cost, we got to do a little calculation here. I know y'all hate calculation on those adjusting interests. But we got 5 at 20. We sold the old 5. Then we sell the next 3 at 25. So we sold the old 5 at 20. The new 3 at 25. So our total cost is 175. We bring the 175 down to this journal entry, and whatever's in that journal entry then is going to come on the income statement because it will be posted to a T account. So 400 less 175 gives us a gross profit of 225, and in inventory is 50. Does anybody have any questions on this one?
So every time I do a problem like this, we like never it's hold on. So whenever there's two different types of inventory, like one's 25 and one's 20, you always like sell out the cheaper one first, then put in for the higher one. Like
if that's what you're doing.
Yeah, like with a problem like this.
Right.
Yeah, okay.
But you know, for a B student, I would expect a B student to be able to do LIFO.
Mm-hmm.
So all of this is staying the same. So we're gonna buy 5 at 20, 5 at 25, and we're gonna sell 8. But now we selling the last ones. Now the purchase journal entry.
Oh, okay.
Copy. Purchase journal entry not changing. We're buying 5 at 20 and 5 at 25, 125. That's not changing. Then when we're selling 8 at 50. So the sales journal entry doesn't change. In fact, the only journal entry and the only thing that's changing is this cost of goods sold. Everything else stays the same, whether it's FIFO or LIFO. So B students, as you working on your FIFO, your LIFO, you know that, okay, if I did FIFO, then just about everything is the same except when I get ready to get this cost of goods sold. So instead of 5 at 20, I'm going to have 5 at what?
5 at 25.
Thank you, Kim.
You have 3 at 20.
25, so that's going to equal what?
125.
This camera's going to be the only one exempt next week. Finish up.
I know you hear me, man. You hear me talk to you, Professor Boyd.
And I was talking too.
Don't do that.
I was definitely talking too.
No, on God.
Oh, okay. And then we're going to have what? 3 at what?
At 20.
At 20.
You heard that, right? Okay.
So that's going to equal what?
60.
60.
So our total now is going to be what?
185.
185.
What about you?
So cost of goods sold, instead of being 175, is 185. Nothing else changed in those journal entries. We go to the income statement now. We got 400 for sales again. What's cost of goods sold going to be?
185.
185. So our gross profit is going to be what?
215.
215.
215. And in the inventory, we're going to have what? Two at what?
20.
20.
Which is 40.
Which is 40.
Professor, I have a question regarding sales journal entry.
Uh-huh.
The two methods we use, like FIFO and LIFO, is like, there's not supposed to be same. The value is supposed to become same because the values are coming different. Because if we use first in, first out, is coming up 175, and with the last in, first out is coming 185. So whoever used different techniques gonna come up different results.
That's right. That's right. Let's look at these gross profits. So
it means like first in, first out is better method as compared to last in, first out?
Depends on whether you're paying taxes or not.
Mhm.
So what do you know if you're paying taxes? You can select whichever method you want, but if prices are going up, what method are you probably going to select? Well, if you're a Republican, you're going to select this method here so you can pay less tax. Now, if you're a Democrat, you say, I got to do what's right, and I'm going to pay $225, that I'm going to pay my fair share of taxes. But the Republicans are going to say, we're going to go with this LIFO because we can pay less tax.
Gotcha.
So the only thing is consistency. You can't change from year to year. Now, once you select the method, the IRS is going to make you keep it. Okay, so you got a choice. So when you start your business and you file your first tax return and you got these different inventory amounts, you got to make a decision on FIFO or LIFO.
But we can change this but we can change this method after a year, right? Once we file one tax.
No, you can't. There's a accounting concept that's called what? Consistency. So you can't pick and choose, year by year. If you're doing FIFO, you got to change it, and then you can apply for changes, and then you got to make adjustments for 5 years. They're not going to let you just go back and manipulate, okay? If so, people could be buying at the beginning of the year and the end of the year and do all kind of manipulation if they could switch back and forth. So you just, depending on what the prices were doing. So things, suppose you were selling gasoline and the gasoline went down in price as it is now. Well, LIFO would no longer be an advantage to you because the cost would be less, but you can now go switch to FIFO, so I'm gonna use my higher cost. Got it?
Yes, sir.
Because that would, because that's gonna give us a better situation. So we'll look at it and see. All right, now we gotta get these A students ready. So the C students just have to do FIFO. The B students got to do FIFO and LIFO, and the A students got to do FIFO, LIFO, and weighted average. Right, Cameron?
What you said?
Right? A students always got to do more, right?
Should it be right? No, but yeah, that's how it's going in this class.
Of whom much is given, much is expected. Cameron, you just don't know. I have people in office hours begging me, I want to be an A student, please.
How you
Really?
count us for having good grades? I still don't understand that. I'm going with it because I want to pass, but like I don't understand how we get penalized for having
I'm saying,
good grades.
Right.
I think maybe it's good to be a C.
Right. Like at the end of the day, we all getting the same degree, right? Well, we gotta have more
You know what
work.
that happened to my GPA?
Please.
I feel like all A students should be exempt from whatever final, whatever you got going on, because we done worked so hard this semester. We worked so hard. You give us so much extra work, and we do it with great.
idea.
Y'all do it. Okay.
What's crazy that there's only principals one.
Okay. Now, I think that there was one principal in class where I guess for the first 3 weeks, I don't think they met. Okay. Then they didn't meet until we went back on campus. So those students, and they weren't using, the person who's teaching those sections didn't go out like me and buy this stuff and buy this program so y'all can just sign in, and then I come in, talk, and explain everything to you as if you're in the classroom. You know what those students had to do? they had to get their book, read it, work problems online, and they get their answers, whether they right or wrong. Okay. So there are different ways. To a certain extent, I provide a whole lot of information, and you don't have to dig as much. Let you practice a little bit of digging on the appreciation and everything. But as you move to other classes and other teachers, you may have to do a lot more on your own with that teacher saying, read this, work these problems. Do you have any questions? All right, we move it on. So I have to prepare you, not just for me, but for other teachers as you move to upper level classes. So for those of you who are going to be in the short session, you might not be having lectures every day. And you maybe, you got other classes, don't you? Does every class you have meet every day? Every class period?
Yeah. No. Maybe. No. I had to think real hard about that. I'm sorry. No. The answer to that was no.
So if you got an accounting class that's not meeting every day, and you still expected to do this work, so I'd work you a little bit harder, just in case. You get a person who's using a different method than what I use, and you expected to do more on your own. So, talk to some people who had me before and ask them about what, their subsequent courses and what we did in this class, and how it helped them down the road a little bit, maybe. I don't want C students to flunk, but A students have to be challenged more. And so I'm teaching to everybody. But an A student's got to be an A student, whether he's at TSU, Rice, Harvard, anywhere. Right, Cameron? Okay.
Yep.
Have a wider range. But you are going to start to get some other teachers. And when you get into accounting and finance classes, and if those classes, I don't know what the class do, I don't know other people do. But if those classes are not meeting every day, you're going to be expected to do this work. Okay? Okay. Now, when we go to weighted average, we still about 5 at 20, 5 at 25. And we selling 8. Now, let's see if we do it this time. Copy. It will not let me put the stuff in here for some reason. Undo. But anyway, this journal entry is going to stay the same. Okay, so the purchase journal entry is going to stay the same no matter what method you use. The purchase journal entry stays the same. And guess what? The sales journal entry stays the same. The only thing that changes is, guess what?
The
Entry tweet.
the cost of goods sold.
The cost of goods sold. That is the only thing that changes. So let's look at how we're going to do this. Weighted average. Y'all have statistics yet?
Yeah, unfortunately.
Good, then you ought to be able to do a weighted average then. And we have 5 at 20. Well, it doesn't matter. We have 5 at 20. And that equals what? 100, right? So we're gonna go down here and say that.
Wait, why are you putting the other 5? Because you only sold 8. So you
I'm
saying,
doing something else right now.
oh, okay, because you got it in the sell block. So you kind of, yeah, look
Okay, I
at
got
that.
it in that box, but I'm gonna take 10, and I'm gonna come to this right here. I'm gonna scratch that, and I'm gonna come to this 20, and I'm gonna scratch that. I'm not gonna use 20. I'm not gonna use 25.
You gonna use 22.5?
Yeah, how did I get? Why is this thing acting up so today? 10. Don't act up, please. And my total is 225. 225. See if I can wind my box a little bit. Okay. So takes out my scratch too. It's acting up today. Okay. So in weighted average, I won't use 25. I won't use 20. I will divide 10 into 225, and I'll get a new cost I'm gonna put in here, which is 22.5. Okay. It's actually in some ways a lot easier. You don't have to worry about the first one. You don't have to worry about the last one. You get you a weighted average. And then we have 10 times 22.5. So 22.5 is the unit cost. So when we get that ready to make this entry down here, we're gonna have 8 at 22.5. So what's 8 times 22.5? I just kind of showed you how to calculate it. We sold 8. What's 8 times 22.5? Y'all put that in y'all calculators.
180.
It's 180.
So we create an average. And you're going to see, it should be a little help for you, that the weighted average is typically going to be in between FIFO and LIFO because it's an average. Okay.
Professor, can you explain this one more time, please?
We have 5 at 125. We have 5 at 25. We have 5 at 20. We're going to use an average. We get the average by adding up the quantities, adding up the dollars. Then we divide 10 into 225, and we get 22.5 as the average cost of all 10. 5 was 25, 5 was 20. So we divide 10 into that, and we get 22.5. So we get a weighted average cost. And so we're going to cost that inventory at 22.5. So when we sell them, we multiply 8 times 22.5, and we get 180. So we get 400 here. And we have, what is it, our 180 here.
I have a question for you when you're done with this, because it's not going to be about this in particular, but.
So what's our gross profit? 220.
Mm-hmm.
Then in the inventory, we got what? 2 at
22.5
0.5 equals
45.
45. Okay. So those are the 3 methods: FIFO, LIFO, and weighted average. I sort of worked on these to give everybody a look at where we're going. Now we're going to come back to FIFO. Okay. And all we're going to work on for the rest of the day and the start of the period on Monday is FIFO.
Real quick, on weighted average, wouldn't that be not the best one to use if you have like an extreme outlier or something like that. Like if it's too big of a space, like just say you bought one pair of shoes at $5 and then you bought the cost of the other shoes is $100. Like why would I use weighted average? And it's like, oh, like you know what I'm saying? It's the price difference is too big to use a weighted average.
Well, you look at your inventory methods. If the price difference is that big, then maybe you need to be specifically identifying the items. You can specifically identify, but if you're buying 1,000 pairs of shoes and everything, that's typically not going to happen. Now, where things have different prices, jewelry, cars, you're going to sell specifically. You're going to identify what you're selling. But when you're selling computers, television, you don't go around identifying. You're doing this method. Got it?
Oh, and with something like computers and televisions, it ain't gonna be that big of a price difference anyway, to where it's like,
Right. But if it's jewelry and cars and other high price items.
okay.
Okay, so let's go back to FIFO. Okay, so I just sort of gave you a little taste, but we're going back to FIFO. Okay. So we're going back to FIFO. And we still in this situation. Let me delete this. See if I can copy it, paste it here. Okay, so what I want you to do is to go through and fill this out. In the first case, you sold 3. In the second case, you sold 7. So I'm gonna clear all of this out. And what I want you all to do, just start with the 3, start with selling 3 and make these entries, go all the way through, then sell 7. We're using FIFO, okay? So start with the 3 and go through and do that. And then we'll come back to the supplement. Did we sell those 3? So we purchased 10, we sold 3. So notice your purchase journal entry don't change, does not change. If we purchasing 10, we're just selling 3. So the purchase journal entry doesn't change in either case. What's our sales journal entry going to be if we sell just 3? Is there a C student in the house?
150? Is it 150? Where you said seller price is 50 and you sold 3, so 150?
150. 150. Okay. What's our cost of goods sold going to be? We're doing FIFO, so we're going to have what?
I mean,
Maybe
5.
60.
Are we going back to our little calculations on the FIFO? What's going to be in this box?
It wouldn't be 60
Okay. How we get there, Miss Emerald? How we get 60?
because it's first in, first out, so it'd be 20 times 3, right?
Okay, 3 at 20.
Yeah.
So that gets us to 60. And so cost of goods sold is 60. So we go to income statement now. What sales?
50?
What sales?
Be
Oh,
150.
150, sorry. Yeah.
150. Cost of goods sold?
60.
60.
So the gross profit?
90.
What we got in inventory? We got 2 at 20. So that's going to
5
equal
at 25.
40. Then we got 5 at 25. So we got all of those. So that equals 120.
125.
So what's left in inventory? 165. Any question on that?
So why'd you put both of them in there as opposed to like the other, like if you were doing, I guess because we're not doing FIFO yet.
We're doing FIFO, but in this
So,
FIFO, sold 3.
mm-hmm.
So if we sold 3, we had to have 7 left. So we're just saying what's in the inventory.
Oh, so that's why you have both of those there. So 2 at 20 and then 5 at 25 because 2 and 5 is 7. Okay,
Yep.
got you.
All right, go sell the 7. All right, how we coming? Everybody asleep? We finished this and we done for today. Let me hear something. We got Cameron.
I got it 350 for the AR or cash.
How'd you get 350?
7 times 50 cents. You're selling them for $50.
All right.
And then for Geometry 3, oh shoot, you got seven how much you say you bombed for? It said 20,
Got
right?
5, right?
Yeah. Wait. Yeah, 5 for 20. So that would be 100. But
Then we got what?
2 for 25 would be 50.
So
oh
what's
yeah,
our,
So it'd be 150 for cost of goods sold.
paying off? Sorry. So we get ready to do the income statement. What sales?
so,
350.
That would be 350, yeah.
Hogs what?
that'll be 150,
150,
What's our gross profit?
200.
200.
What do we have left in inventory now?
We have 3 at 25. It'd be 75.
Team 3 is stealing the day.
Hooray.
Okay. Your attendance quiz is in assignments, 10 points, and it's multiple choice.
Can you go ahead and like while you're doing the quiz, like post what you was gonna post real fast?
What was I gonna post?
Someone asked you about the bank reconciliation thingy, Majiggy.
Oh,
This make life easier on everybody.
y'all working me very hard. Okay. In next
Great.
class period, we will start on FIFO and work some more FIFO problems. And then we'll go to LIFO at the end of the class. Then on Thursday, we'll have our quiz for some, an exam for anybody who's ready. We may not have anybody ready. Okay.
I have a question. Okay, so when we're doing this, are they always going to tell us if they want FIFO or LIFO? Or
If you're a C student, you only have to worry about doing FIFO. Just get FIFO done, and I'm content. If you're a B student, you got to do FIFO and LIFO, and I'll tell you, you're gonna do both of them at the same time. You're gonna do FIFO,
okay.
you're gonna do LIFO. And if you're a student, you're gonna have to do all 3.
Okay.
A question. So you're saying that next week, Thursday, for A students, if we're ready to do the exam, it's supposed and we pass or whatever, that we're done with like the work for the semester.
Mm-hmm.
And then it's just supposed to be on like inventory, like this FIFO, LIFO, and
Inventory and theory questions.
right. Okay.
Now the format is gonna look something like this, where the entries, as you can see, the only entry that changes is cost of goods sold. So you'll have a setup like this. You make a purchase entry, it goes all the way across. you make the sales entry, you got all of that done. The only thing that's changing is cost of goods sold. Okay, so it's not as much work. Here's a practice problem with answers that shows you a detailed one. And we'll get into the inventory chart next time. Then I think on page 169, students, is your homework problem. It's called 5-1 shoe inventory problem practice. This is your practice problem. So you need to turn this in to me on next Thursday.
Okay.
So you have a lot of situations and you would have worked on this. Then your exam would probably be about 8. So you're working on 14, but your exam is going to be 8, FIFO, LIFO, and weighted average. So this is the homework one, 5-1, that the A students will turn in. And then you'll do 8. Okay, so you would have worked on 14, but on that exam, you just got to do 8 and some theoretical multiple choice if you read it. That'll be up this, it'll be your option. If you're not ready, then you can do a comprehensive final.
And what's the comprehensive final?
Journal entry, post to the ledger, trial balance.
Oh no. I think that
I think we're good with this one.
yeah, I like this other one better.
Yeah.
You'll have a choice. I'm not gonna force anybody.
Thanks for the choice, but
Professor, in next class, we're still gonna practice some of this FIFO, LIFO thing, right?
Correct. We're gonna.
All right.
We'll have the whole class. The first half of the class will be FIFO. The last half will be LIFO and some weighted average. So we would have covered it all. But as I'm showing you, there's only one number changing: cost of goods sold. So you should
Professor,
be.
instead of this coming Thursday, we're gonna have final for A students. Can we change it to Tuesday? Like, I mean, next. Instead of having the finals for A student on this coming Thursday, can we move it to the next Tuesday?
Hey, speak for yourself. Now, wait a minute. No.
Hey, yeah, excuse me.
Yeah, you speak for you. I like next Thursday final. I got other stuff I want to be doing.
No, that way we're gonna get more time to practice now. Because we have to submit this FIFO thing on Thursday, no?
Yeah. Well, you would need to. So it just depends, if you ready for it. That's one thing. But if we look at it, we're trying to make a decision on and we'll look next week at it and we'll just see. I mean,
You said it was like optional, right?
We do it on Friday. Yeah, we'll see. Whatever y'all think.
I like options.
Professor, I don't know. I don't remember if I'm an A or a B student. Can you please tell me? I might be an F at this point.
Dixon.
What? What's the problem?
You know what the problem is.
The problem is I don't know what I am, so I don't know what I'm gonna be taking.
Well, you're an A student. You know, you're on the borderline. If you had a good computer, you wouldn't have a problem in your book and stuff.
I'm still be an A student.
Yeah, but you wouldn't be causing me so much trouble.
So that make me not an A student because I cause you trouble. You cause me trouble.
I say you would be a stronger A student.
Oh, I still am. I just was double checking.
You're supposed to be doing this work. I sent the stuff to you.
What was it?
That's why I'm on
I
you.
do.
You know, if you were a poor student, I wouldn't be jumping on you all the time. But because you're a good student, I got to bring out your fullest potential.
Oh, okay, I was just making sure.
Well, you're sure you do good work. I just think you could do much better. That's all.
Okay, I got you.
Got me?
Mm-hmm.
You got to be frustrating yourself.
I don't want to frustrate myself. I want to chill.
Yeah, but I'm just saying that you're trying to turn stuff in, and I'm just saying, you know. So just look at that. And everybody not like me now.
I know I've been trying to work on it. I don't know why it does that. Like every time I turn something.
Everybody is not like me. And some people don't tell you if it's not in Blackboard, it's not turned in.
You always come up blank. I don't know why.
Okay.
So, okay, you know, I was thinking, so we're not going to, the book that you had us purchase, we're not going to get through all of it this semester, right?
Yeah, we use it next semester too.
Oh, so the other half of the book is for principals too.
Mm-hmm. Assuming
so,
picking
so in other words, in order to get the full use out of this book, I got to take you again because this is your book.
Mm-hmm.
Well, I already registered for you next semester on
Wow.
Tuesday and Thursday at 11 a.m. to 12 or 11:30 to 12:50, whenever it is.
Me too.
Yep.
Y'all see what he did there, right? He had us buy a book that he knew we couldn't use unless we
I
took
wish
him
he would have.
twice.
I wish he would have said this in the beginning so that I would have bought Cengage for like a year, or like Cengage did this thing for
Dang.
like 2 semesters. Cause now I gotta renew it. Lord.
I'm a little bit tight about that now because I feel like you kind of manipulated us at the beginning. You could have let us know what was going on.
Not the manipulation.
Wait,
Now
so
I got to go re-register and take your class in the spring. How you know I wanted to be in your class in the spring? I don't like wasting money, so I'm gonna go ahead and take you. But like, you could have said something.
This is the first time anybody ever said anything about that. They just buy the book and they go home. So I never had that come up before. Most of the book was cheaper than the regular book, so that was part of it. How much did that book cost you?
Oh, I don't know. I bought it through. It was Cengage. I got Cengage Unlimited. I don't know.
I got Cengage Unlimited. It was like $100.
But no cost, there's no big price on it.
Wait, so for Professor Boyd, you said that quiz that you just upload, that's for B and C students?
Yeah.
Okay. So if I was turned in, that would be no extra points?
No extra point. It's too easy.
That's why I'm asking. Well, not that's why I'm asking, but
I'm sorry, dog. You funny, man. Hey, I would try for them extra points too.
Hey, for real, can we get some extra points for just being us, like for just being A students? Cause man, this is like really, it's been a long semester.
You get points for being A students. I don't think about that.
Helping the other students out. I have compassion, you see. I'm not a Republican.
I need to go vote.
Say what?
I said I need to go vote.
Yeah, you better.
Actually.
Check Blackboard now on the bank reconciliation assignment to see if you have what you need.
Yeah, it's there. If we got questions about it, we can come to your office hours, right?
Correct.
Wait, what's today? Say Thursday. You got any more office hours this week, or is it all next week?
Give me a time. Oh, we got a faculty meeting tomorrow from 1 to 3, so maybe around 4.
4. All right,
That
I'm gonna
work?
check my schedule. And I'm gonna email you.
Just email me. Yeah, just email me. I know we have a faculty meeting from 1 to 3 or something like that.
Professor, don't forget to post this video on YouTube so we can practice.
I'll post it on YouTube so you can practice.
Thank you. So we can leave now? I mean,
This has been the last one.